Where we're going, we don't need roads. Guys, this is an emergency update, okay? And although I'm wearing these goofy glasses, I'm 100% serious. I just took a brand new short position and I'm targeting pretty low on it, and I wanted to talk about it real quick. So as you can see, we're on the 15-minute time frame. Nothing fancy here. We have this range, which you can see highlighted with our light gray box in the background, and you can see my P&L percentage at the bottom right of your screen. So we just took this short, which we gave in advance in the VIP Discord. So if you're not in the VIP Discord, make sure you join. And the way to join is you have to DM my GeoBot here at the top right, the 4-digit code that you're gonna hear throughout this video. The first digit is gonna be a 6. All right, so we're in the short, and this is an emergency for a couple of reasons. So I'm gonna go back to the 15-minute time frame. I'm gonna show you guys, what do I love to do? I love to draw my trend lines. Just kidding, I like to draw my liquidity lines. The entire day, Bitcoin has been super stubborn and just gone literally straight up. Nobody that has been longing, literally for the entire last day, have been challenged on their longs since we hit this low. Which, by the way, guys, this low I did give in advance in the VIP Discord. Surprise, surprise. The next digit's a 4. So red flag number 1, we have a lot of liquidity in this range right here. So if you know anything about range trading, you know that usually when we're at the low, we rotate to the high, then we rotate to the low, then we rotate to the high, then we rotate to the low, then we rotate to the high, and so forth. Now, we have not really tested the low of the range for quite some time now. It's been 5 days, okay? It's been 5 days, whereas we have pushed the range high a few times already. Okay, so how did I get in this trade? Well, first things first, as we put in the high of the day today, we had something called a bearish divergence on market cipher B, which is where the momentum waves are making a lower low, but price is making a higher low, and a higher high, and we are expecting somewhat of a correction. So let's just say you missed the short, okay? Well, you can see very clearly that there's a vector candle that we left behind that we could very much so come and recover, correct? Well, what we can do in this instance is we can pull an order block, and we can say, all right, when price comes back up to our order block, we're going to be looking for shorts. What happened when we came back up to this order block? Once again, as we made a higher high, our market cipher B was giving us a lower low on the momentum wave. Okay, so we're in the short position and we're currently up 55%. Cool. Where are we targeting and why is it scary? Well, first things first, as I mentioned at the beginning of the video, we have this liquidity line. So that's already a huge red flag for any of the longs. And I've been not longing all day. Although everybody seems to be longing, I'm a little bit more bearish, hence the name of the video. So right off the bat, because there's liquidity, what happens in these zones, where is my highlighter? What happens in these zones is people have their stop losses here, people have their stop losses here, here. And so when we break the level or the retail trend line that I look at as a liquidity line, because we are not retail, we do not trade like retail, we start to say very quickly that these long positions that retail is in, right? Anybody that longed here, their stop loss is here. These long positions will close as market short orders, which will eventually pull the price all the way down to the downside. In addition to that, we know that based on our rotational effect that I explained in the beginning of the video, when it comes to ranges is when we take the high, we usually come to the low, then we usually come to the high, come to the low, come to the high. So that is, this liquidity line is good confluence with us rotating to the low of the range, but it gets even worse than that. This low, this range low, as I mentioned as well, has not been tested since the beginning of this week, since Monday, right? Where is it? Let me get it magneting. Okay, right there, right? So we can draw a line here, as I just did, and we can write, what can we write? SFP on it. So we need to be aware of this level right over here. So now, if we were to take this low, which I think is very probable, we can now move our risk to reward slider here down to this low, but look at how it gets even worse. If we take the low of the range, as we very well may, what do we have here? This is a vector candle zone that can be taken, and it's on higher term time frames as well. In other words, if price were to break this low, it is very likely for price to make its way down to this point in the chart just as quickly as it made its way up, because there's an imbalance here, okay? There's an imbalance. It's a fair value gap. It's a vector candle. It's why we follow the liquidity. It's why we follow the money. So this is a very key area, and I believe that if we take actually this low, we're not going to actually SFP it. We are going to fill this fair value gap, and we're going to make our way down. But it gets even scarier than that. What did I draw up here? A liquidity line, right? And we know that market makers like to make a run for liquidity. What is this? This is also a liquidity line. And if you look at it, nobody has been tested on this entire move up since last Sunday, so a week ago. So now we can take our target and bring it down to the bottom of this liquidity. But it gets even scarier than that. This was a range, right? Very clearly you can see we have a range here. We had a low, we had the high, And this was our range until we inevitably broke it. This liquidity line is at the middle of the range. And what did we say about ranges? When you have the rotational effect, you expect the low to the high, to the low, to the high, to the low, but there's no low here, right? So anybody that longed from this low, once again, was never tested. We broke the range without retesting this low. In other words, not only can we target this liquidity to the downside, but we can also target these lows because these lows have not been tested. So let's draw our target down even further. Guys, and I hate to be the bearer of bad news, but just when you thought it couldn't get worse, what is that? That is untapped liquidity, right? And on top of that, if we draw our range similarly to how we did 2 seconds ago, right? What do? We have our rotational effect, low to the high to low to the high, whatever. This low has not been tested. So not only has everybody that's long since the last week not been tested, but everybody that is long since September, so since last month, about a month ago, have not been revisited and retested since the end of September. It's been an entire month. Okay, so you guys can kind of see the point on how I build my narrative as to where price is going, right? So this can get a lot scarier than people think it can get, and I think people are way too bullish. And then my final target, which I made a couple videos ago for you, would probably be down to the 25.1 to 25.2 area to fill in these vector candles. So guys, this is how you can treat a scalp trade to potentially turn into a swing trade. You build the narrative and you build targets and say, okay, it could come down here for this reason, for this reason, for this reason, for this reason, right? And of course, we have to monitor market cipher B along the way, but I want to bring one thing to your attention. Right now, we have the VWAP curving down on the 4-hour time frame. This is not a bearish divergence. However, this is a very high anchor wave, and then we could be getting a trigger wave to the downside. In addition to that, on the daily time frame, if the anchor trigger plays out on the 4-hour time frame as we are potentially expecting it to, especially because we have a lot of liquidity down here that the market maker can come and make a run for. If that were to play out, then you can see very clearly that on the daily time frame, we will have a bearish divergence with market cipher B and with price. And by the way, this is not just any bearish divergence. This is literally, if you were to take the measure tool, this is literally, give or take, a 7% move in Bitcoin bearish divergence. And what better of a narrative is it for the bull market to have not begun yet, for price to pump all the way up to 30K, only to rip it down and grab all the liquidity that everyone's been longing for over the summer, and especially come back and take this wick. We've been talking about this wick for a long time. It is inconsistent across different exchanges. I'm not happy with it for that reason, and we cannot be surprised if price were to make its way down there. If it takes that wick, guys, things are getting a lot uglier. We're coming for these fair value gaps over here, for these vector candles, and possibly even coming for this low down here. And you know what happens if we take the low down here? We're likely coming to these vectors. So at that point, that is where I expect potentially the bull market to begin. I've been very vocal about it on my channel. But that's it for today's update, guys. The last 2 videos for the VIP Discord are going to be 2 and 3. Warning, guys, warning, because people are too bullish. Don't listen to the noise. We do not trade like retail. 95% of retail loses, so why would we learn and why would we trade like retail? We trade like the market makers because we're trying to get big W's. I'll catch you guys tomorrow. Happy trading. See you later.